At this stage, what we're likely to see is a continuation of the discretionary approach to policy easing. And rather than doing a wholesale reduction in either interest rates or the reserve requirement ratio, China is looking at which industries and sectors need support and providing that by targeted RRR cuts. And I think that will continue to be the case. And the principal reason for that is China is trying to engineer a deleveraging dynamic overall. And when you want your banks to stop lending or not lend as much, you don't make the price of money cheaper by cutting interest rates, nor do you provide more money to the banks to lend via reducing the reserve requirement ratio. So I think we will see this continuation of what you could call micro policy easing, which is targeted and very discretionary and focused on specific sectors and industries. Look, I mean, it's an open question at this stage. The data is softening, but external demand appears to be picking up. The export sectors and the external sectors of the Chinese economy could have a good second half of the year. But I think clearly there are concerns on the level of growth, how quickly growth is slowing, where it may base in the absence of policy support. So obviously the discussion has been had at very high levels of whether a more generalised easing in policy needs to occur.